So, Wall Street had been in a slump for 4 straight days. The mood was, let's just say, not great. But then, boom, in just one day, it all flips. So you have to ask, what could possibly be powerful enough to stop a market sell-off dead in its tracks? Well, today we're going to break down what's being called the Nvidia effect. I mean, that really is the multi-billion-dollar question, right? When everyone is selling and the momentum is just plunging, what does it actually take to turn things around? This week, we got a surprisingly clear answer. Okay, so to really get why this rebound was such a big deal, you have to understand the mood leading up to it. We're talking 4 straight days where this cloud of uncertainty was just hanging over everything. Investors were getting really nervous, thinking a much bigger drop was coming. And this chart pretty much shows you the situation. 4 days in a row, all red for US stocks. You can just imagine the vibe, right? With every single day, that negative momentum was just building and building. Honestly, traders were just bracing themselves for day 5. The question on everyone's lips was, is this thing ever gonna stop?
Yep, that was pretty much the consensus on Wall Street. The mood was just plain pessimistic. Everyone was preparing for the worst. And then, one single company's report came out and completely changed the game.
Which brings us to the hero of our story today, Nvidia. I mean, talk about perfect timing. Just when the market was desperate for some good news, this chip giant comes along and delivers an absolute blockbuster of an earnings report. It flipped the whole script. Get ready for this number. $57.01 billion. That's what Nvidia pulled in a single quarter. Seriously, that one number was enough to just break the market's fever. It sent this huge shockwave of optimism through trading floors everywhere. And just to put that in perspective for you, analysts were forecasting something around $55 billion. So Nvidia didn't just meet expectations, they completely blew them out of the water. This wasn't just good news. No, this was a massive statement about the real health of the tech industry. So, what's the big deal with this number? Well, here's the crucial part. It helped calm down one of the market's biggest fears, this idea that the whole AI boom was just an overheating bubble about to pop. Nvidia's report basically screamed, nope, the demand for AI is real, it's strong, and it's not going anywhere. And the impact? Oh, it was immediate. That one report was the spark that turned a sea of red into a wave of green. Let's take a look at how the big indexes actually reacted. You can see the rebound was pretty clear across the board. The S&P 500 ticked up 0.4%, which is solid. But the real star of the show, that was the tech-heavy Nasdaq. It jumped 0.6%, really leading the charge, all thanks to that fresh wave of confidence in AI. But hey, the story doesn't stop with stocks. If we want to get the full picture of what investors were thinking, we've got to look at how other assets reacted. And spoiler alert, not everything moved in the same direction. So first up, let's talk about gold. The precious metal basically held its ground, trading above $40.80 per ounce. Now, you might be thinking, why? If the news was so good, why didn't gold fall? Well, because even with that great news from Nvidia, there were still these nagging worries about what the Federal Reserve was going to do next with interest rates. Bitcoin, on the other hand, seemed to catch that AI wave. After a bit of a dip, it stabilized right around $91,000. It really looks like all that positive risk-on feeling spilling out of the tech world gave crypto a little boost right when it needed it. And this kind of helps explain gold's behavior, right? This is what we call safe haven demand. Even on a really good day for stocks, you could still feel that demand was there. Investors were basically using gold as a hedge, a little insurance policy against that deeper, still unresolved uncertainty about what the Fed was going to do. So, after all that, where does this leave us? Well, look, Nvidia was absolutely the hero of the day. No question. But those bigger, tougher questions about the economy, yeah, they didn't just disappear. And this is the key piece of context here. On the very same day, the Fed released its minutes. You know, the detailed notes from their last meeting that give us a peek behind the curtain. And what did they show? That policymakers are totally split on what to do next with interest rates. That peek showed a whole lot of uncertainty. So while Nvidia gave us this powerful shot of optimism, it didn't solve this huge fundamental debate. All right, so what are the big takeaways here? What should we remember from all this? First off, AI-driven tech is, without a doubt, a huge market catalyst. Second, when things feel uncertain, assets like gold are still a super important hedge. And maybe the biggest lesson is that it's a pretty stark reminder that a really balanced portfolio might just need both, those high-flying growth drivers and those steady defensive plays. And that really brings us to the final thought to chew on. For one day, Nvidia was the answer. It was the hero. But looking ahead, you're kind of left wondering, in this big battle between incredible corporate strength and all this macroeconomic uncertainty, which one is going to win out in the end? Honestly, that's the question that's probably going to define the market for months to come.